Hello and welcome to the Alternative Edge Report. I'm your host, Olivia Vaz, and today we're focusing on the importance of hedging and happiness in a world that may be different than what we see in front of us. I'm giving the compass over to Mowry Young. Mo has been in the financial world for 27 years. He started the Young Financial Group in 2000, a referral-only firm that has recently collaborated with WealthCare. He manages nearly $500 million in assets, has a 99% client retention rate, and finds metal allocation essential for happiness. Let's welcome Mo. Hi, Mo.
Hi, boss.
Hi, I'm Boz. You're Mo. We can be on a first name basis. Is that cool?
That's all good.
Awesome. I like the one syllable names. Mo, you use a specific formula for clients that I find very interesting. Tell us about the confidence formula.
It's our proprietary value through my firm, WealthCare Capital, that has a number of patents that are used. And it's all about helping a client make the most out of their lives. And if you were to examine history of investing in our modern age, there's a hyper focus on return. And most in my industry hold themselves out as return managers. But I would ask with common sense to say, if you're spending most of your time in front of faces and not information, how could you call yourself a return manager? And how could your value proposition be that? Instead, I spend 90% of my time in front of faces, and the agenda is to help those clients improve and benefit from their money during their lives. It's a passion and a heartfelt engagement for me. If you were to look at returns in a range from matching the market to beating it historically, operating within that range, you would see that what money is doing is not as important as what money can do for a person. And the way that you can maximize the benefit of money for a person is to, in a measured way, align their capabilities with their goals in accordance with their priorities. And then on an ongoing basis, a goal-based monitoring adjustment is pursued. So that when a change in the market occurs or a change in a person's life occurs, there is a realignment of capability and goals, allowing a person to maximize the benefit of their money. How many people are essentially dying on a pillow stuffed with money that they wish they never spent or wish that they should have spent? What amount of clients out there could have saved less and still achieved everything that mattered in their lives? These kind of questions are rarely asked, and you have to measure to know the answer. And when you do, you radically increase benefits that people can have from their own money. In the end, there's a continuous trade-off taking place, essentially compromising goals that matter less to get substantially more benefit from the goals that matter most to a person, so they can live a better life with the same amount of money. So being engaged in continuously in what money can do for a client, you'll have a radically bigger impact on a person's life than hyper-focusing on return. When the ability to beat the market that is quite possibly best defined as random is a fool's errand.
Mm-hmm. Obviously, you're using this confidence formula because you are concerned about your clients' well-being, whether it is how they use their money or some factors that we can't change in front of us. Mo, I understand that you recently, or you've been studying information that you find it very important for clients to up their hedging in their portfolios. What 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 risk have you found in the world why they need to focus on hedging?
That's a great question because normally we operate as passive strategists and focus on what is truly controllable: cost, tax, and risk. And we manage the uncertainty of markets by measuring their effect upon us and then adapting using a client's goal adjustments to keep them overwhelmingly confident in their future without sacrificing their lives. That's our bread and butter. Uh, and I am not a return manager, and I am at the base of the financial pyramid, uh, serving average people, and I'm average myself. Uh, that said, Ayn Rand had a wonderful quote. It went something like this: "The hardest thing to explain is the glaringly evident that so many refuse to see." And
Hmm.
we are, in this country uh, at the end of empire. If you watch George Bush's New World Order speech after the fall of the Berlin Wall, the empire came out of the closet, and it's largely a financial empire, and its agenda is one world global order, one world global government, where nation states are compromised. And that agenda is very clearly spelled out. Look at the United Nations 2030 agenda. I mean, it's there for us to read. We see it. And this empire is run by a transatlantic oligarchy, and non-government organizations, our government, many institutions, our largest corporations, all get in line with that agenda. And that empire, again, largely financial, is dying. And we can see it in three ways, and it's explicitly clear. First, we're going bankrupt. The Federal Reserve, if you were to view it as a business, would clearly be bankrupt now. Our federal debt, our deficits at one point in time where we're adding $1 trillion of debt every 100 days. The fact that while we've had high debt to GDP in the past, the debt is a percentage of GDP. The last time we had World War II to end. What are we going to cut now? This is an economy built on opaque debt instruments, and debt is at the basis of everything. And assets have been rehypothecated and financialized, so we're precarious at best. The second reason that this empire is collapsing is because of a rise of populism around the world, where populations of nation states are demanding that their globalist leadership provide their loyalty to the benefit of the people they serve and not to an elitist hierarchy. And we're seeing it. We're seeing it in Europe. We're seeing it in South America, where we just experienced an election involving it. Along with that is delegitimization. Our trust in our institutions is at all-time lows. I mean, it was low before. Now it's ridiculous. We've all lost faith in our institutions that we don't believe operate in our interest, but only in their own. And then lastly, it's the BRICS alliance. Our system of trading paper to get everything we need from the world is going to be constrained. And it's going to be constrained by a growing BRICS alliance pushed together by this empire that follows rules and uses rules to maintain hegemony. And a primary set of those rules is the green movement. And the green movement is clearly Malthusian. It is designed to depopulate. Any level of human development has always involved an increased use of energy and population density increase. The green movement does the exact opposite. And the rest of the world does it. And they're not interested in following a green agenda. They might take advantage of it, but they're not going to follow it.
Mm-hmm.
And they are finding safety in numbers through the BRICS alliance, who's already bigger than the G7, and before this is over, will be bigger than the West. They are the principal producers of commodities in the world, the principal consumers of commodities in the world. They have the majority of manufacturing. They are collectively a larger military force. They have 2 out of the 3 largest nuclear arsenals on the planet. And they have an agenda, and that agenda is de-dollarization. And with that fulfilled, this party of money printing is over.
Mm-hmm.
And that's, to me, our press from all directions doesn't want to talk about it. And most people seem to be unaware of it.
Yes.
But I take it very seriously. And I'm just, again, an average person out here. I'm reading, I'm watching, and I'm paying close attention. And to me, while I can never know what's going to happen, and I would never have the audacity to believe that I could make a prediction,
Mm-hmm.
I do face a serious obligation to fulfill my fiduciary responsibility to my clients. And that means that I'm going to hedge against the risks that I believe exist, even if so many of our institutions don't want to acknowledge that risk is there. And it's a risk of systemic bank failure. It's a risk of hyperinflation. It is a risk that delegitimization will lead to people steering away from investments that they've been able to trust for generations.
Exactly.
And in an environment like that, where do you go? What do you do? What would represent real wealth? Well, probably something without counterparty risk.
Mm-hmm.
And if you own metal in physical form and you own it, it's not in somebody else's name, then you have something that will preserve wealth and probably offer an asymmetric growth opportunity should the things you're hedging against actually happen. And that's why I use metals.
Mo, let's lean into this because, like you said, you are alarmed about what's going on that we can't really control. I mean, you're talking about financial failure and irresponsibility, and again, a world that we cannot control. Let's lean into wealth preservation and what assets would you use? Because if banks are, let's say, like, if banks fail, our typical portfolio, an optimized portfolio, would not be helpful for us. So how are you hedging? What are you hedging with? What metals are you looking at, and how does that secure wealth preservation for us?
Well, first, you have to have a portfolio that's ready for multiple outcomes, right? You're not going to make a prediction. I'm not going to put 100% of my clients' money in metals when the outcome is absolutely unknown. What we do is we stick as close as we can to the optimized portfolio, but we've made 2 adjustments because of the circumstances at hand as we perceive them. First, on the fixed income side of the portfolio, where we stick only to U.S. government debt, we've shortened maturity substantially, and we operate, with floating rates and inflation protected uh, methods. Then the other thing that we're most interested in doing is including that metal exposure, and we use 10% in gold and 10% in silver for those that are game for this. And the gold and the silver are different in opportunity, but the same in their lack of counterparty risk. We've got the central banks of the world accumulating more gold in the last few years than they have in their entire existence. Some central banks are storing gold in accounts that they call the gold revaluation account. Can you imagine what that's for? Then we've got silver, which is at 60% of its 1982 high? Mm-hmm. How utterly ridiculous. In an environment where the demand for silver keeps rising, we've been in a deficit for silver for the last few years. The Silver Institute sees no meaningful increase in supply, with demand just increasing. And then we have to go down the rabbit hole and admit that we have our largest banks shorting silver, and doing so often naked. That it seems almost illogical in the face of this rising demand and diminishing supply. The inventories for silver on the exchanges is the lowest I think I've ever seen. So if you're looking to hedge against rehypothecation of assets and hyperinflation and possible default, as extreme as that sounds, what could be better than gold and silver that is in itself wealth and has no counterparty risk?
Mm-hmm. Mo, you mentioned before that gold bullion is ideal. Obviously, there are some investors that like to use different products. Are there any other products out there that you've been increasing along with bullion?
Well, first of all, the bullion that we own are nationally minted coin. They're what's recognized, they're what's acknowledged. They're the Cokes and the Pepsis of the metals world, and they'll be trusted. And they're worth the premium. You pay a premium at purchase, but you also get a premium at sale. And I think they stand above other methods of ownership. Now, beyond the metals, it's back and shorter maturities on the bonds. It's back to the optimized portfolios. In any planning and anything that you do, always be prepared to be wrong. And in this case, always admit with humility that none of us know what's going to happen. Is the radical increase in American productivity that some project out of the new policies that will come from our government enough to outproduce our way from these troubles? I don't know, but that's what we own stock for. We have a long-term bullish view on America. The issue is what we have to go through, to get there. When you look at a 70% consumer economy, can you really call that an economy? The American golden age was one where we produced and consumed our own products, and free trade and cheap labor were nothing to pursue. In fact, the sham of comparative advantage has left us looting our own economy. What is a good job now? It cheats. Where is the quality of employment that Americans used to have? So I would argue that I'm optimistic for the future that we will reestablish our ability to produce and consume our own products and operate as a nation state with our leaders not trying to operate an empire. So, under that premise, there's a place that belongs in stock. And you're hedging the stock with short term bonds. And then you're using metals as a crisis hedge that has an asymmetric gain opportunity because of the circumstances we find ourselves in today.
Wow. Well, our viewers really appreciate your time. I know you're a very busy man. And again, referral only, everyone. So this insight is key. We're very lucky to have Mo on the show today to show us happiness and hedging. Mo, thanks for talking about your confidence formula as well. I'm going to apply that to all assets of life. And we really appreciate you having being on the show today. We hope to have you back.
Well, it's a pleasure. And I'd say to the audience, make the most out of your lives and start measuring what you really can do with your money. And you might be surprised.
That is key. Thank you, Mo. And thank you, viewers, for watching today's Alternative Edge Report. Again, I'm Olivia Vaz. Make sure to like and subscribe so you can not miss out on future episodes. Stay healthy and wealthy.